Hey, what's going on, B&B family? This is B, I'm B, and today we're going to talk about the stock market again, y'all, because there's a lot of poor stuff going on.
Yeah.
But I just want to bring up my quick little introduction before I bring it up to BBB. So
BBB, now I'm BBB.
BBB. So there's a port IBO that just came out. B&B. Airbnb. They got the rival hotels. They're this platform. They sell a lot of housing, a lot of apartments. You go on there, you buy a room for like $125. You don't have to worry about, reservations. You can just go in there, click a little code, go inside. The pre-IBO price was at $65 yesterday. I bought it for $65, and then it jumped it to $147 today. And a lot of people, regardless of the pandemic and despite the fluctuation with the economy, I thought it was still a good move because even though people are not traveling a lot, they're not going to hotels, they're staying in, try to minimize risk of the virus.
Yeah.
Eventually, it's still going to go up. So regardless if it drops like in 2 to 3 days, which it won't because the market will be closed.
Yeah.
I thought it would be a win for me. But B.
What?
Welcome.
Yeah, it's been a minute. So I was on vacation.
The quarantine?
Yeah, and then a little quarantine afterwards because, just coming back from a far distance and stuff. Got to quarantine for a little bit, make sure everything's good to go. But hey, back, good to go. Good to get some stocks. I'm excited. I love stocks.
Me too.
I love it. Maybe we should just make this a stocks channel. Just talk about our own. We could talk about our own stock, what we're buying, what we're selling, our own portfolios. There you go. And everyone can laugh at how good we're doing or how much we're failing miserably. Either way.
Right now.
What do you mean you're failing right now?
Because I sold a couple of stocks that I didn't know.
All right, you can't say I sold a couple stocks. What did you sell?
Well, one I sold AT&T. I think that was a bad decision.
See, I was going to buy AT&T. Yeah,
because AT&T is one of the first carriers emerging to 5G, and I think today it was like $28, but then I kind of noticed it was slowly building up, and I was like, damn, I missed my opportunity.
Why did you miss your opportunity? You might have to buy it higher, but it doesn't mean you missed the opportunity.
That's what I'm saying, but I missed the opportunity caused by me being fearful of my decision.
Yeah.
And another one, too, was Oxy, like I mentioned on the video yesterday. It went up $21, and I had 10 shares. Mm-hmm. And I sold it because, of course, with the Biden administration, they're more renewable energy, they're more diverse with that. So I was like, damn, it's probably going to go down. So I was like, let me just throw my money into something else. And then then they put it out on their company that they're going more towards management, which means that they have a more diverse array of like skill sets. Mm-hmm. So I was like,
hey, so let's go into this thing. We're talking about the volatility of stocks, and you failed at selling at the wrong time. Is how you feel. It's how you feel, right? We don't know. It could come out good for you in the end. We don't know. What we need to start talking about though is specific stocks that we're identifying. There's a stock out there that we were just talking about that I was really excited. It's BioNTech, and you told me about them like 2 or 3 months ago, and I purchased just a couple shares. I should have purchased some more. Now, by any means, we're not like huge stock people at all.
No,
I think. All right. So my portfolio. I'm going to show it to you right here. Look at this. It's got $3,683. That's it. That's the extent of my riches. So it's not big at all.
Yeah. That's fairly good though.
This is ground. Yeah. This is ground. So this is my Robinhood. I have 3. So I have my Robinhood, which is the most. Then I have Webull, and I deposited $300 into it, and then I have M1 Finance, which has $200
yeah.
into it. So I have $500. I have $4,100 technically, or 42, I guess, because it's close enough round up, right? $4,200 invested total. So there's the extent of my fortune. So we don't have a lot of money by any means, but that's also why I like to talk about this because B here told me about BioNTech, and I purchased it on my Webull account, and I bought it at $83 a share. And the cool thing is that BioNTech is making the vaccines, and it's now 120.
37?
Was it
I think
137?
it was 37.
We're going to go over to it real quickly.
Yeah.
So right here, BioNTech is now, it's up to $131. Whoop, right there, $131. So that's pretty good. It's an increase
you bought
of
3 shares too.
Yeah,
So.
I got 3 shares of it. So I bought it at $250 for $83 a share, and now the market value is $382. So it's up $131.
That's good.
Which is a 52% increase.
Right there. That right there.
Yeah, you're shaking.
It's opportunity cost. That right there. It's opportunity cost.
Yes. So I was looking.
I made that mistake.
I was looking at actually selling it because volatility right now. And now, of course, I think that they'll go up a little bit more, but it's like I could sell now and buy shares for something else. But I don't know. I'm kind of torn because we're talking about volatility, and are they going to keep going up because they're making the vaccine, or like we were just talking about as well, that is it going to level off? And
It'll be too late.
It's going to be too late because they're a smaller company. So Pfizer starts making all these things, and this small company then just starts slowly going back down.
I don't trust Pfizer though anymore because they're saying that it's like 90% effective. However, the second shot that you receive it has harmful side effects against the person.
So like you grow like a third arm or something. Yeah.
Possibly, but that's why I don't trust Pfizer. Moderna, I trust a little more because one, you can store it more effectively. I think Pfizer, you have to like store it. I mean, all vaccines are stored in liquid nitrogen, but I think this one, I'm no virologist or
none of us are,
or freaking in the pharmaceutical company, but I think Moderna lasts longer, and also too, it's the virus is made up of messenger RNA.
Yeah. Well, let's look at this though, too, B. You actually validate kind of what I'm saying is BioNTech is a smaller company. So as these bigger companies start taking their share, they'll start trying to grab more of these smaller companies as well. They might subcontract the creation of some of the things down to them, but I feel like their stock's going to, not shoot down, but it'll just start going down a little bit. After that, then, the vaccine, once it's out, the virus is gone. What really, to me, we've had this discussion, what little this virus really does is gone. And then where's BioNTech going to go? So to me,
diseases will always.
They will, but they jumped up because of COVID. COVID's gone. Well, their price, I feel, again, like I said, it will slowly diminish. They'll continue to use that money to research more stuff and try to make themselves a bigger name. But do I sell now because stocks are based off of futures? The future right now is the vaccine. When the vaccine is being implemented, which it will be very soon, what's the future then? And I feel like the future is going to be, well, the vaccine's gone. They're going to fall to their rightful place down lower on the totem pole, and I'm going to lose some of that money that I just gained.
Well, I'll be real with you. I think, honestly, I would keep it, me personally.
You would keep it?
I would keep it.
Okay. So, and that's funny because...
Keep it right there. I mean, there's a lot of battles going on, even though Europe is beginning their vaccination.
Yeah.
And the United States is still trying to decide when this is going to be like finalized. But if I was you, I would try to keep it because even like Moderna was one, like it jumped up to $169. I only have one share and I made $70 off that one stock, but it kept going down. But then it kept rising up again.
Yeah, okay.
So I think,
it kept going down.
Yeah, but eventually it came back up.
Yeah.
Because of Pfizer and other companies not leveling.
Yeah, I just kind of wonder. So my personal investment strategy right now at
Is it
$4,200. Investment strategy is not. You said impressive.
Aggressive.
Oh, aggressive. I don't know what that is.
Like so.
Big words are too big for me.
No, you're good. So aggressive, like investment type, would mean.
Oh, you mean aggressive? I thought you said ingressive.
Did I say aggressive?
I don't know. They can let us know. They can let us know. Be like,
But,
you said aggressive.
and aggressive.
B, you can't hear
Oh,
anything.
all right, so that's why I said.
Yeah. So I'm not gonna. No, it's not aggressive. I am actually probably less aggressive. I would
You're
think.
more growth conservative.
No, I am dividend. I like
Dividend.
dividends a lot because whether the stock grows or not,
You still get dividends.
I get dividends. I mean, I have a lot of that money that I have right now
It's all
is in dividend. I have about 67 or sorry, not 67, 16 to 1,700, I believe, in one stock alone. Maybe up to 2,000 in one stock alone. And each quarter I get roughly a $50 dividend from it. So I'm like, man, $50, that's not bad. I mean, yeah, it's that. And then plus, since the stocks especially, it's in gas, I believe it's a gas pipeline company, they're low right now. So it's just going to be growth. So I'm going to get growth and dividend out of it, which is awesome at this time. I think it's time, like if you want to buy and have growth and dividend, you should be buying fuels. You should be looking at oil and stuff like that because those prices are going to go up. Even if Biden takes the presidency, he has to get through the Senate. I don't think oil's going anywhere. It's not. All that's going to happen is taxes are going to go back up, so oil prices are going to go back up, and those companies are going to come back up to their prices that they were going to have before. And so
and the recession will go
you can ride growth and dividend on those. And plus, if you look at some of them, I think Marathon Oil, BP, they have like 3 to 6% dividends, so which is nice. I actually am playing riskier. I'll be honest, I am playing riskier right now. One of the stocks I have, which has like a 15% dividend, I mean, that thing is risky. But
that's not a risk. I mean, 15% though.
It's the stocks are extremely down because of the virus. Mm-hmm. So as they go up, the percent will of course go down. The dividend percent will go down. But as the percent goes down, it just means because I'm getting growth out of it. So I'm going to get the growth, then the dividend on top of it.
Okay, actually, I did want to bring something up since you said gas and oil. Did you hear that water now is going to be a, what's it called again? Starts with a C.
Commodity?
Commodity. Water is going to be a commodity now. This, give me a sec. I got to look. I can't remember exactly what the symbol name is, but there's a Chicago Institute that said that they're going to start selling water now, because of the effects that are going on in California now. And
what do you mean?
Because how water is becoming more scarce.
Mm-hmm.
They're going to make it a commodity now.
Oh, on the stock market?
On the stock market.
Really?
Yep. I can't remember what the
That's
symbol
pretty crazy.
is,
That's pretty crazy.
But I think, me personally, I'll be brutal. I think it's kind of screwed up. I mean, oil and gas is a little different because it's something. I mean, we all need that to live our lives, but water.
Yeah, but you don't need it. Right? You could buy a bike and get around stuff.
Yeah, water is like an absolute necessity if you want to maintain your health and stuff.
Exactly.
But one company I did want to talk about, you actually might know this.
Yeah. Okay.
Is,
all right. Did it
Disney.
Go up? Did it go up yesterday a lot?
Yes.
Or today a lot? Because yesterday they put out a lot of stuff.
Yeah, because
he's
not a Star Wars fan anymore.
Oh my goodness! But I did watch the first episode of The Mandalorian.
Okay, we'll talk about that later.
Okay.
Maybe other videos, but like he said, they got The Mandalorian. Mm-hmm. They have this new Clone Wars spinoff called The Bad Batch. They have another TV show, Star Wars: The Acolyte. They have Star Wars: Rogue Squadron. They have Star Wars Andor. He was a character in Rogue One. And then they're about to put out Loki from Marvel.
Yep.
They did Wonder Vision, and then Captain America and the Winter Soldier. He's not Captain America.
Falcon. Sorry.
Falcon and the Winter Soldier. Yeah. So that's a lot of streaming platforms.
Yeah. Plus, they also did the War Machine show that they were going to.
Oh yeah, Armor Wars.
Armor Wars. Yeah.
And then Disney, on top of that, they added 85 million subscribers to that because all of those.
Exactly, which is why they did that, because Disney parks have been suffering greatly. I mean, even if they close it and nobody's there, they still have to maintain the stuff. They have to keep it up running. So it's costing them lots of money just to keep the parks going while they're closed. Not to mention that also, since they make all their money off of movies and stuff, all that stuff's also down the drain. So really, they have to focus on the streaming service. So how do you do that? You throw a ton of stuff out there, and people are like, "Oh man, I really want to start watching this again." Because honestly, after Endgame, there wasn't a lot of hype for Marvel after Endgame.
Spider-Man?
No, there wasn't.
Black Widow?
No.
Those are too hype.
No, those were not big hype. People may have been people were still on the high of Endgame when Spider-Man came out. So they went and watched that.
Because it came out right after...
Black Widow. Who do you know that watched that movie? Don't say yourself.
Well, first of all, it hasn't come out yet, but everybody loves Black Widow and they love Scarlet.
See, I don't even know that the movie didn't come out yet because you brought it up. But yes, I could see that being popular. But there's not... After Endgame, I even had discussions. I think we had discussions. That kind of closed it for me. I'm like, hey, I don't need to watch the next phase.
It's still going to close it for me, but I'm still saying it's still going to be hype though because, like I said, Black Widow has been in the series for a long time, and even though we're not talking about stocks anymore, but this is related to stocks.
Yeah.
It has a strong foundation for Marvel in general.
Yeah.
And she's one of the biggest characters in Marvel. So I think, in my opinion, people are still going to be drawn to that. And the fact that they're going to release it on Disney Plus makes it even more marketable because, like you said, imagine if they did it Disney Plus and maybe the movie theaters.
Yeah.
That would bring both lanes.
Now, did Disney do that? Because I actually saw this a couple days ago. Where was it? Warner Brothers, or I think it was Warner Brothers, said that they were going to release all of their movies of 2021 on HBO and Max.
Yeah, well, but HBO is having a battle right now because apparently Justice League, because that's
the failed DCU version.
Yeah, they're trying to figure out distribution and stuff. So they still try to fight.
No, I know, but what I'm saying though is maybe Disney did this to offset it because but
this was before,
when Warner Brothers, I know, but when Warner Brothers says, "Hey, we're going to release all of our big films," which I believe they have. I saw a couple. They showed pictures, but I never saw it. I think Dune, the new Dune, is coming out. I guess it might be Warner Brothers as well.
Oh yeah, I heard.
And that's supposed to be it's got a lot of hype to it and stuff.
Kind of like a Star Wars.
Now, granted, I'm reading the book right now. I like the book so far. It's going over well. Unfortunately, the new movie has already made changes, which I think is going to be stupid because they want to be politically correct inside of today's day and age. So there's characters that are no longer the guy that it should be. It's now the girl, and it's like, hey, no, this is a dude in the book. It needs to be a dude. It's like you play the character the way the character's played.
I agree with that.
And so it's stupid. And it's supposed to be, as far as I am in the book, it's a pretty cool character in the book. So they're just going to screw him over. But either way, we're not even talking about that. Sorry. Either way, the stocks, I believe Disney did that to try to say, hey, look, they're doing this. We got to counter it because they're going to get a big boost. We can't have them getting the big boost without us getting a big boost. And so they did it twofold, to counter that as well as to make sure that they're getting their stock and stuff up. Yeah, their revenue up so their stock goes back up. So do you even own Disney? How many do you own?
Just one share.
Just one share. Okay. Yeah. All right. You need to start buying more than one share.
I don't have
You're diversified too much. You're just sliding.
I'm not too diversified. I think 75% is more in technology. 10% is and let's see.
Well, I mean,
entertainment, and then 10 is in hospitality. So I think I'm more diversified when it comes to.
I mean, company-wise, though, at least diversification in companies. Well, because I'm pretty much in the energy sector. I mean, I
need to get more into that.
I have 280 shares inside of that pipeline company. Like I said, for about half my money is in that one company. Then I have other companies that also go on. But I do have about $800 in a REIT. You know,
real estate.
Yeah, real estate.
Yeah, I have Vanguard.
So I do like those a lot, but of course they don't have as much benefit and stuff. But I'm diversifying in that aspect, but it's not as diverse as it needs to be. By the way, we should, after this, I like the idea of us doing topics, like not just the volatility, because the volatility is so wide. Because I'm talked about BioNTech, we're talking about Disney a little bit. We're talking about our own things, which I think is good. I think we should be talking about our own stuff inside of these a little bit more as well.
Mm-hmm.
I like the idea of me saying, hey, I bought this stock and it's failing
Right.
for me,
Mm-hmm.
or I bought this stock and it's doing well for me. I think that's not a bad idea for us to do, because I don't know what your strategy is. I told you what my strategy
Mm-hmm.
is, but I don't know if you're focused on growth stocks, dividend stocks. Are you an options guy? Are you buying on margin?
Hell no.
You know what I mean? I mean, so
I'm more of a long-term investor. Like,
Yeah.
I tried options. Like, I think, like, it's too. I mean, you gotta take. I mean, no. What's the saying again? Scared money doesn't make any money.
Yeah.
But at the same time, I think. I mean, what's the point? I mean, honestly, if you're just gonna put like $100 and all of a sudden the only thing you make is like $1 or something. But
Yeah.
because that happened to me one time. I'm like, well, damn. But I'm more long term. Like, if I buy a stock, I'll let it sit there for a while. And and honestly, I think patience has been an important part of me getting those returns. Like, I might have to wait like 3 months or honestly a year to see a stock go really high, and I'm like, okay, now I'm gonna sell it or something.
Yeah.
And then I like the ETFs because I think the normal person without any secondary income, without any side hustles, they invest in those the SP 500s, which Tesla is going into now. That'll be a big change in the SP 500. So and as long as it's building compound interest, and I keep accumulating money, then I have nothing to worry about. Maybe when I'm 60, I might have a mill. And I'll be like, well, it's going to take a while, but
Yeah.
I'll say I've done a good job. But of course, now with the knowledge I have as being 22, I realize there's better ways to get it faster, and that's why we're doing the podcast too. We have a passion for it, but then eventually it could be big, and that's why I would
Exactly. So let's end the video here, because we talked a little bit about volatility. We talked about my account, your account. Like I said, we talked about a lot of things, but I think we're at a point here to where we've talked a little bit. We've actually done a big little sprinkling all around, right? And I think we should start doing more specific things on it and everything. So I think this is a good place for us to call it a day and get the next video up, talking about, so we can actually talk about how you get from where we are and get to, like you said, $1 million at 60.
like a tutorial.
Yeah, maybe not a full tutorial, maybe just what we think, what our path is. Yeah, and the way we want to do it. And it's going to be based off of not just our own opinion, but maybe some research and stuff that we talked about that we can maybe say, hey, this is what I looked up. And then, we might not have any references, but I mean, it's not like it's political opinions and stuff like that. This is something for a betterment, right? Finance, how we can better ourselves, and usually those opinions are agreed upon with the people that actually practice it. So I think that'd be a great topic.
It's non-biased.
Exactly. I think that's gonna be awesome. So with that being said,
By the way, we're not financial advisors.
No.
So don't.
Never. You saw how much we got. We definitely end up financial advisors. But anyways, hey, smash the like button. We love to see that. We'll definitely leave a comment. We want to read everything you guys have to say. Tell us that we suck. Tell me not to put a blue shirt underneath my shirt again. It's a highlight. See, like, you got the blue here, you got the blue here. Yeah. And definitely subscribe, because we would love for you guys to be able to let us know that you guys want to see more of our content. Until next time, enjoy and have a great day. Later. That didn't work.